If you've been around the trading block, you've probably heard people throwing around SMC like it's the new meme coin. But today we're cutting through the noise and we're getting right down to the nitty gritty on what smart money concepts really are. No fluff, no fancy jargon, just straight facts on how the big players move in the market. So let's get to it. What is SMC trading? Okay, champs, let's break this down super simple. Smart money concepts is about understanding about how institutional traders really operate. Think of it this way. If retail traders are playing checkers, institutions are playing chess. It's not about following the crowd. Sorry, TikTok traders. It's about understanding real market movement. Let me give you a quick reality check. Banks and institutions control 90% of the market movement. Retail traders, that's us, are only about 10%. So who would you rather learn from? Let's talk on what really moves the market. Featuring Mr. Valentino. Number one is we're going to talk about liquidity pools. So we're going to go over the basic market structure. And number one is going to be liquidity pools, where the smart money is hunting. So I'm going to show you an example of a liquidity sweep. Pools of liquidity are really important because that's where smart money wants to collect money. Institutions capitalize on the failures of retail traders. And so if the majority of traders are learning the same system and institutions know where traders are most likely going to take buys and sells, they can target areas to stop out the traders, which will allow them to have better entries for their position. I'm going to show you an example of a liquidity sweep. So if you look over here, you can see that the liquidity was swept right over here. So before this sweep even happened, a lot of traders would look at this high time frame peak as a resistance level. A lot of you are probably familiar with that because that's usually what you learn as a beginner. But if institutions know people are going to take sell trades off that resistance level, wouldn't that just make sense for them to stop out everybody? And that's what happened here. As you can see, this is why you have that sweep. Because what it did is it took out the stop losses of every trader there before the big move down. This is why certain levels matter more than others. Because on the way up to the trend, you see small time frame, quote unquote, like resistance levels. But when you're looking at really high time frame levels like that, it means there's a bigger move coming. And the institutions at play are going to want to make a lot of money on those moves. Next, we're going to talk about market structure. So as you can see here, this is an obvious bullish trend, and we're looking at higher highs and higher lows. Support and resistance theory technically says that we should be bouncing off all of these levels, and that broken resistance levels become new support levels. But as you can see here, it never hit that new support. It went lower and lower. And for SMC, where's the targeting? Imbalances in areas of liquidity. These highs and lows are on a smaller time frame, so I don't expect any big reversals. Usually you're targeting previous day liquidity or higher time frame liquidity like all-time highs. As you can see, we just continued up in the trend and we didn't have any, big reversals until that high time frame point. This goes to show you why the obvious support resistance levels are a trap. Here are some common misconceptions. Myth number one, that you need fancy indicators. Here's the truth. A clean chart tells the best story. The less cluttered, the better. Price action is your best friend. You need to be able to read it without all of these distractions that make you second guess. It's like you're in a book group and you're trying to understand the story, and then you have all of these other people telling you their perspective when it could be wrong. Myth number two, SMC is complicated. Truth is, it's actually simpler than most methods. It just requires patience and discipline. When I first started SMC, my anxiety completely vanished because before it, I was trying every single indicator strategy that you could imagine. And when it comes to retail concepts, there's so many conflicting ideas, but SMC removed all of that because all I really do is put lines and boxes on my chart. The one thing is you do have to be a lot more patient with your entries, because instead of waiting for like a laggy indicator where the line crosses over, which by the way, it will present itself a lot. When I'm waiting for price to go into a high time frame imbalance, that's not the trigger alone. I need to go into smaller time frames. So it allows me to have a more precise entry versus indicators that will give you too many entries. This is what helped me prioritize A+ setup, which helped so much scaling my accounts with little to no drawdown. Myth number three, it only works in Forex. The truth is SMC actually works for all markets. It's based on how money moves. It's not just random patterns. I'm gonna have a real talk time with you. The biggest struggles I see is one, information overload, too many YouTube gurus, conflicting information, analysis paralysis. Number two is wrong focus. You're chasing quick profits. You're ignoring your risk management and you're not understanding the bigger picture. You have to zoom out. Number three is the lack of proper education. This is where most traders get stuck. They try to piece together free content and they end up with an incomplete puzzle. Like I said before, and I say it time and time again, there are so many good traders giving good information out there. But if they're all painting a different picture, you can't just take pieces from everything and expect to see the vision clearly. You wouldn't believe the amount of people that I talk to when they're like, okay, well, I'm gonna go practice my strategy, and I ask them what it is, and they watch the charts move for like a couple weeks, and they're just randomly placing trades thinking that they're building a strategy. That's not how this works. Now, here's the truth. Smart money concepts has changed the game for me and my students. In our VIP trading bootcamp, we break down literally everything you need to know all in one place with all the right information. Literal years of education and information that I've done, I put all into one spot. It has complete market structure analysis, real-time trade breakdown, live trading sessions so you can actually learn and ask your questions that you're going to have, and literally so much more. Drop any questions or topics that you want me to cover down in the comments below. If you're somebody who wants that extra help, wants to take this seriously and really get involved into trading, check out the link in my bio. There's tons of free resources on there and more expanded advanced resources on there for people who want to learn how to be an independent trader. Remember, champs, trading is not about getting rich quick. It's about learning to trade like the smart money. I'll see you in the Champions Academy, and remember, you're savage, not average.